But I'll change gears and talk about chemicals. And Ajay Joshi tracks the chemical sector with a real, I mean, what can I say? With a magnifying glass. I mean, every time you want to understand anything complicated in the chemical sector, specialty sector, difference between H2SO4 and calcium carbide, just call him and he's just going to explain you very, very nicely. So what's happening in your part of the world with tariff now getting sorted out? Are we in for good days for the chemical industry in India?
Yeah, good morning, Nikunji. I think we were on track. Like the last quarter went really well for Indian exporters. Some of the chemical companies even saw 100% growth in terms of volume and value in the last quarter compared to previous quarters because of these Trump tariffs. But every other week, Mr. Trump is changing his take. So now the tariffs on China have been cut down to 30% again. So the next 2 quarters are not going to be as good as the previous quarter for Indian chemical exporters because a lot of US customers, they shifted to Indian suppliers. A lot of customers gave more supply share to Indian suppliers in lieu of the tariffs, which were around 200%. In last quarter. But now Mr. Trump has again slashed the tariffs to 30% on China. So a lot of customers in America are going back to the Chinese suppliers, so which is going to negatively affect Indian exporters in coming quarters. So chemicals, we were anticipating a very good rally in terms of export for some of our Indian players. But now, again, we are at the mercy of Mr. Trump. We don't know what he's going to do next.
Now let's understand the Indian chemical industry. There is one bulk, if I may use the terminology, then there is semi-branded, and then there is specialty chemical. Am I getting the nomenclature right? Bulk?
Yeah, perfectly.
Okay.
Right, yeah.
Bulk is big in numbers, but small in margins. Semi is somewhere in between, where Indian companies are there. And specialty is where everybody wants to go, but nobody is there. Again, am I getting it right?
Yes.
Okay. Let's understand these three categories. Which are the best companies in these three categories? One is hope, second is reality, and third is big but not relevant.
Yeah. In the bulk, companies which are catering to the Indian market, which are in the import substitution play, they are doing well, which are making in India for India, because in bulk we cannot compete in export with China or with Middle East. So bulk chemicals, which are voluminous chemicals, companies catering to the Indian market, companies like Deepak Nitride, they are going to do well. Companies like GNFC, they are going to do very, very well because they are catering to the Indian market. In the semi-specialty segment, now again we have a mix of companies like SRF, companies like Naveen, companies like Aarti Industries, companies like Jubilant Ingrevia, which have a mix of domestic sales as well as export. So semi-specialty is one segment which is the growth driver for Indian chemical players right now, because they do have one foot in the export market and another foot in the Indian domestic market. So they are getting the best of both the worlds. Specialty, pure play specialty, we do not have any such companies as such, but many companies are getting there. Like Jubilant Ingrevia is one such good story. Over the last 2 years, they have slowly migrated towards specialty from the semi-specialty play. And I think in next 2 years, they will be a pure play specialty chemical company, because the chemistry they are in, pyridine chemistry, only 2 countries are able to perform that chemistry, China and India. And European customers and American customers are more inclined towards Indian suppliers because of the cleanliness of the chemistry, because of the manufacturing route Jubilant Ingrevia uses. So companies like Jubilant Ingrevia are getting into the specialty pure play. So yeah, these are some broad bifurcations.
So Ajay, highlight for our viewers, what are the big tailwinds that are currently aiding the sector, and what according to you could be the headwinds also that we could possibly face?
See, right now the biggest roadblock what I'm seeing is that the tariffs on China have been reduced to 30%. That is again going to create a menace for a lot of exporters. But companies active in chemistries where India has an upper hand, companies like Jubilant Ingrevia, companies like Privi Speciality, companies like SH Kelkar, which are in flavor and fragrance chemistries, there we will continue to see, robust growth. But other sectors where we have Chinese competition, particularly agrochemicals. Agrochemicals, again and again, this I say that Latin America used to be a very good uh, customer center for Indian exporters. But lately, China has taken over the Latin American market. So agrochemical is again one such segment which is going to get adversely affected now with the reduction of Trump tariffs on China. USA, the inventory issue which we were facing in last 2 years for agrochemical, that has just gotten over. And Indian exporters were anticipating to cater to the US market. Companies like UPL, companies like Sharda Cropchem, they were anticipating big customer orders from US. But now with the tariffs on China getting slashed, they are also facing some issues. So agrochemical is not going to be good this year, but companies active in flavor and fragrance segment, companies active in chemistries which are unique to India, like Jubilant and Grevia, they are going to continue to perform well.
Invest in 3 Indian chemical companies. Time horizon 3 years, no market cap, purely based on business. For a minute, ignore valuations. I mean, let's look at 3 companies where business is doing well. Which are those 3 companies where you see, because of demand, supply, product, and the client profile, they can grow at 15-20% for next 3 years? Have I lost him on this very important question?
Yeah.
Hello.
Yeah, did you hear my question? Should I repeat it?
If you may repeat, please.
Okay. That was perhaps the most important question. Can you hear me? I'm going to ask again so that I don't get it wrong.
Yeah.
Okay, great. Now you've given me a thumbs up. If you have to invest in 3 chemical companies in India, irrespective of the market cap, but purely based on what they have to offer to the client, product, Chinese competition, and relevance of that product, which are the 3 companies where you would say, I'm going to buy?
One is, of course, Camlin Fine Chem. They make a product called vanillin, and the product falls under anti-dumping duty. So US has put anti-dumping duty on China. So India is the only alternate supplier there. This, I also told back in August also, I think on 18 hour only, about Camlin. So the company is seeing very good performance in terms of export volume. Their plant utilization has also gone up. So Camlin Fine Chem is one such company. Second company is Jubilant Ingrevia. Again, I have been harping upon that they are migrating from these generic chemicals to specialty, and they are seeing robust volume, value, and margin growth. They are expanding fast. They have warehouses in America. They have very good sales and distribution network there. Third company is SH Kelkar, which is also called Keva, in the flavor and fragrance segment. Now, flavor and fragrance segment, apart from regular customers, they also have contract manufacturing customers like Unilever. Once they get into a customer like Unilever in one country, they become the supplier of Unilever all across the globe. So wherever Unilever has manufacturing plant, they are an approved supplier. So so these are the 3 companies: Camlin Fine Chem, Jubilant Ingrevia, and SH Kelkar.
Okay, so good to have you then on the show, Ajay. Thanks for your time and thanks for telling us where lies the opportunity within the chemicals basket.
If you like this video, then like, share and subscribe to ET Now.